We got some people on here. Okay, so I am wanting to know, what are y'all doing? Hey, does anybody want to come on with me? That's the first thing I need to know, guys. Because I love talking to other people. Instead of just my face. Like talking to myself is just a little, it's kind of normal for me. But if y'all want to chat with me, that'd be cool. So, first off, I want to thank everybody for coming here and spending my lunch hour with me. Working and looking for deals. Awesome. So, I did that little video. I got a lot of awesome responses. I've read every single one of them, guys. Thank you so much for all of your comments and all of your support and everything. At the end of it, I was like, if you want to talk about credit cards, we can do that. And a lot of people, I got an overwhelming response of people definitely wanted to talk about credit cards. As of right now, there is a lot of credit card debt in the United States. It seems like it's a normal thing. It's something that you're supposed to do. You're supposed to get credit cards and you're supposed to, build up your credit report. And all that jazz. You know what I mean? As you can see in the thumbnail of this video, my credit score has significantly jumped, depending on what my debt and my credit card balances are. So there's different things that you can do to increase your credit score. Now, one of the biggest things is, do you need a credit score? That is something that is in debate recently. Beforehand, a decade ago, you had to have a credit score. I mean, that was like a normal everyday thing. So now Dave Ramsey is humongously large. They are actually teaching you to be debt-free from the beginning, and to get out of debt and not have a credit score at all. So these are things that, if you're young and you're not in debt or you have very little debt, these are things that you need to be thinking about. What is your long-term goals in life? As a penny shopper and as someone that loves to get a good deal on something and has a steady income, you're like, oh, well, I can definitely afford 90% off of this, and this, or even 75% off, or stack these coupons on top of that, and I'm only spending $30 for $300 in goods or whatever. You're like, I can totally do that. It's legit something I need to do. But at the end of the day, if you're putting on a credit card and you have 12% interest and all that stuff, you're not actually saving any money. But you're always like, but this is me. I'm always like, well, I'll pay it off. I'll pay it off, at the end of the month. I'll pay it off. Dolores, yes, you just pay it off every single month and never carry a balance. But it doesn't actually happen like that every single time. So, because there's concept and then there's reality. You have to have the follow through for that to even work. Does that make sense? You have to have that follow through. So I just wanted to come on here, tell everybody this is not financial advice at all. This is just my journey, my views, and how things have happened for me. We have always had, like I said in my last video, we actually relied on credit cards early in our marriage. And then as things progressed, and we wanted different things and stuff like that. And the way that society is, oh, just make these payments or just do this and just do that. It just seemed normal to be in debt, for one thing. It's always normal. I even have family members that are like, you'll always have a car note. You'll always have debt. You'll always be in debt, blah, 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 blah. You know what I mean? But just 40, 50 years ago, people were not in debt the way that we are today. Yeah, their home was mortgaged, but things were just different. And so we can make all these excuses. We can make all these excuses of why or whatever. But the main question is, how am I going to get out of debt? So there are several different things that we've already done and tried. For the longest time, I was doing rolling over the 0%. So I went from a credit card that was like $3,000. I rolled it over into a 0% credit card that they increased it to like $4,000. And I paid that off for a whole year at 0%. Keep in mind, you have to pay the principal. Like, you have to pay as much as you can on these. If you ever do that, you have to, like, what you really need to do is take that $3,000 that you transferred over plus the $500 or 5% or whatever it is, transfer. There's fees associated with that in addition to whatever. Sometimes there's introductory rates. You can expand it to 18 months for 1.2% interest, whatever. There's so many different options. But if you were to take the amount of money that you put on the card, divide it by 12, and pay that every single month, even if it's $500 a month, then you could pay it off within that introductory period, or just divide it by 10 because maybe you don't want to pay that large amount in November and December whenever you have to buy Christmas presents and stuff or whatever. Just like be smart about it and so we've done the transferring thing, but the problem with transferring one balance to another balance to another balance to another balance every single year is that every time you continuously pay your credit cards on time, your credit score gets higher and higher and higher and better and better and better. And over time, your incomes should be getting higher and higher and higher. So your credit limit gets higher and higher and higher and higher. And it's so hard whenever you're on the phone to transfer this small balance onto this credit card when the representative says, well, you have a credit limit of $16,000. We can just send that straight to your bank account for 0% interest, $16,000. And then you have to pay off the other card, which, common sense, you're definitely going to pay off the other card because it's going to go up to 21% interest. But now you got $16,000. You pay off that $4,000 card, that extra $10,000. You're like, oh, well, I can just, put it back on the card and pay it off. Or, you know what? I can wait until taxes come, and then I can just, put this over here and then wait until taxes come. And then I can just put that, $7,000 or whatever we get back from taxes onto it and pay it off or whatever. All these different what ifs, all these different scenarios go through your head. Like, it doesn't really seem smart not to take the money at 0%, right? But then life happens. And then you're like, oh, we need a new water heater. We need this. We have this extra money. Let's go on vacation. Or, if we don't do it, we're never going to get to do it. We don't know if we're even going to be here next year. Like all these different things. And then that money just dwindles down. to a couple $1,000s, then at that point you're like, well, we don't really even have any money to even pay it off. It's just crazy. So different things like that happen. So then once you get the 16,000, you have to do it again and all that, because you're not going to pay 21% interest. And not to mention the minimum payments go from $100 to $300. So like you physically have to refinance it just to afford the debt. So those are problems that we've had in the past. Just horrible decisions. Having horrible decisions and not having that mentality of being out of debt, just always thinking you're always going to be in debt, is something that I've struggled with, me personally. And then once you get such a large amount, it's hard for you to roll it over. You're like, well, maybe I should think about doing debt consolidation. Now, there's that debt consolidation where you don't pay your cards, and then you're like really in trouble and your credit score goes down, and then they negotiate and all that stuff. Or there is something called a personal loan that will consolidate your debts. So you can get an unsecured personal loan when you have good credit, and they will consolidate all your credit cards on that. Well, they finance that out over 10, 15 years, and you have, a lower payment, but it takes you 15 years to pay it off. So that's not a good solution either. So as of right now, I think Dave Ramsey's snowball effect is probably the best solution for everyone in the lower income brackets. Like anybody that makes under $100,000, this is definitely something that needs to happen. It's like the easiest. And it works on your psychology. So you can psychologically be ready and prepared to pay off the debts that way. No, mathematically, it may not be legit, because you could have a 20, I don't know, the government capped credit card debt interest rates to like 21 or 23%, something like that. So you may have a 21% over here and you may have a 12% over here. You think you would want to pay off the 23% first, but if it's $10,000 and this 12% debt interest rate is only $1,000, you want to pay off the $1,000 first. So there's just so many things that, and then other people, the main people that actually do, they call it leveraging debt, are people that make over $300,000 a year. And that is not me. So it's not like something that I can really do. You hear these millionaires, they lost it all and they had $1,000 on their credit card. So they, took a cash advance and did all this stuff. And that is not the norm. That is not something that, those are also the people that would live out of their cars for 6 months, if that makes sense. That's not the normal way of trying to get out of debt and making money. Now, I also want to talk to y'all about health, about our health system, about our nutrition, about diseases, and want to say cures, and like what people go through and different things that we could do to help our overall health in the United States, because the United States and the way that our system is horrible. It's all ran by money. And the things that could actually help your health doesn't cost money. So I was just watching a documentary from this doctor, scientist dude that devoted his life to trying to figure out how to cure cancer. Well, he did this long study, and he actually told everybody that his study came out to that people that stopped eating overly processed foods and sugar, just those two things, which is like everything that we eat, for a short amount of time, reversed cancer and other diseases and things like that. Even like high blood pressure and stuff like that. So it's something to do with your microbiome and all these over processed stuff and the sugar, the high sugar in your diet would break down your microbiome. So just going into ketosis, which is like the keto diet, and do water fasting, those two things for a short amount of time would reverse a lot of those things. It will restore your microbiome or something like that, and your cell walls and stuff like that. And you could like prevent a lot of things, especially in the elderly. Dementia, it reversed dementia, and it did, what else did it do? It fought against cancer. It cured cancer, he said. Now, these are only certain cancers. And he also debunked the myth of like stuff being hereditary, some of them being hereditary. Now, there may be hereditary factors involved that would make you more susceptible. But anyways, so that is very, like, my father and my mother died of cancer. So I'm researching this significantly as much as I can because I don't want to die of cancer. You know what I mean? So, you're growing your own tomatoes and cucumbers. Good job, honey. Yes, losing weight is big. Have you ever heard of tomato skin being poisonous to humans? So apparently in another country, I think it's France or somewhere, where they use a lot of tomatoes in sauces and stuff like that, they always peel their tomatoes. Do you peel your tomatoes, Miss Winnie? So that's something. But like, I mean, I just went off topic, but yeah, apparently you're not supposed to eat tomato skins, which in the South here, we've been eating them. So I don't know what I'm doing. But anyways, so yes, credit cards, in order to build a high credit score, you need to actually have credit cards. And I'm really good at keeping a high credit score. My credit score has always been between 700 or 680 to 8. The highest it's ever been is 815. So I have an awesome credit score, but I am in debt significantly. And one of the ways to keep your highest credit score is to have acidic foods are causing joint pain. Really? Anything natural trumps processed food. Correct. Yes. Anything that has a label on it that says ingredients and has a label on it with ingredients is not good for you. Just FYI. Anything that says ingredients, even so, whenever I went on my diet, so you ask God to bless your food and remove all impurities. Do you think that works? Like if you go and eat a Snickers, do you think that that's working? So I believe in God. I'm a Christian, but I also believe in science. So that's just my point of views. So because I believe God made science, made us in a scientific way, if that makes sense. So we can get into that in another video, but oh, you are so funny. She said no. She said, "Oh no, that's just foolish." Okay, thank you. Okay, so anyways, where was I? What was I talking about? I was talking about credit score. So if y'all want to know how to increase your credit score, every single credit card you have, pay it down to like whatever the amount that you can borrow or you can use is 10,000. Pay it all the way. Like, do not use 10,000 of it. Use 30% or 20%. So only use 2,000 of it. And then make sure you make all the payments on time and do that for all of your credit cards. Only 20% of all of them. Now, you can only do 1 or 2 transactions per credit card and then pay them off every single month, but keeping all of your balances below. So keeping all of your balances below 20% of what your available credit is on your credit cards. And then having, and in addition to just the balances and like how much you have the ability to, just keeping your balances low is number one. Actually, number one is actually paying everything on time. That's number one, of course. Everybody knows that, I think. Number 2 is keeping your balances low. Number 3, which is really big one, is lifespan, like how long you've had this card. So the reason why some of my credit scores, like sometimes my credit score will drop, like as you can see in that picture, it'll drop because if you were to close out a credit card, let's just say, I'm not going to use this credit card anymore. I paid it off. I don't want that temptation there. I'm going to close it out. Well, if that credit card you got when you were 18 and you closed it out because you finally paid it off 20 years later, that is going to actually drop your credit score because you were going from a 20-year credit. So they take your oldest debt and your newest debt and then divide it. So if your oldest is 20 years old and your newest is only a year old, then your average credit history is 5 years. See? So that is another thing that you have to think about. I use Credit Karma. It tells me everything, all these different things. But I've noticed, and keep in mind, Credit Karma is not your FICO score. It's not, it doesn't show there's 3 different credit things out there, and it only shows you 2. But anyways, so it's not like 100%, all that. But, so your credit life, and I'm getting tired, guys. I'm sorry. I'm in my nightgown. I haven't even told y'all. My old granny nightgown. Yes, I've cut my physical cards up and just left it open. Now, problem is when you do that and you don't actually use the accounts, the credit bureau, the credit cards may do 1 of 2 things. Or 3 things. They may just let you ride like that, which, yay, we're riding. And then they can actually say, oh, this card's inactive. We're going to close your account. and then they'll close your oldest. I mean, they could close your oldest credit, on there, and it affects your history, which affects your score as well. And then they can do something else, which I cannot stand, is increase your credit limit and send you checks in the mail and try to get you to actually use that card, which that's happened on numerous occasions, that they will just increase your credit score for no reason. Now, I will tell you this. I have the only card that would not automatically just increase my credit limit is the one I have with my bank, my local bank. They have not increased my credit limit without me asking. Thank you. I love that, because it's hard to have, like, when you have a really high credit score, it's hard to have a credit card that has a low credit limit on it. That's so true. That's why my husband tells me to use it once a month. Yes, they will just completely cut it off. Or they'll do random stuff. Like, you never know what these people are thinking. I think it also depends on corporate greed. Like, if they need more people, if they have too much liability, and different things like that. You know what I mean? So now, another reason why I was studied interest rates, and not interest rates, but studied my credit report, because your interest rates are determined by your credit report for any loan that you ever get. Your automobile insurance, your insurance, is determined by your credit score, if you didn't know that. And so one year, this is the problem. So, like, if you're going to be transferring debt, so like different times of year, different things would happen. So I prepare my credit every time I go to make any type of financial loan or anything like that. So, like, if we want to buy a car and we're going to put it in my name, I prepare my credit by transferring these debts over into my husband's name. And then so my credit score will significantly increase. And then I can go and get a car, just in my name or whatever. And then so I made this horrible decision and not realizing what I was doing, because I was buying a new car. Well, I bought a new car, and then I went to go get insurance on it and renewed the policy, or, added it to it, and it was time to renew or whatever. And it pulled off my husband's credit, which his credit went down because I transferred the debts over to his name. And so we paid more in insurance in addition to just the car being more. This was like 6 years ago. But so there's always different things that you can do to leverage different scores and things like that. Or, a lot of things that I would do is wait until I got tax money back, because we have 3 kids. We make under, like on our tax return, we make under 100,000. We're not wealthy, like I said. So we actually get a significant, chunk back. And so whenever I get that chunk of money back, I will actually go through Credit Karma and all my accounts and pay them all under 20%, because I don't have enough money to pay all of them, but I can pay each one of them down. And then that will increase my credit score in 30 days. And then I can go shopping for auto insurance and homeowners insurance and things like that and get a better rate. Because let's just say whenever I bought the house, we had the mortgage, we had all this other stuff, we had debts that we had to pay off. We have so many debts, it's ridiculous. But anyways, maybe I didn't have the best credit score, whenever we originally got the house. So that's another thing. Auto insurance and hazardous insurance and things like that. You need to be switching insurance companies every 2 to 3 years they keep jacking up the rates. Now, there are some people out there that have been with the same company for 20, 30 years, and they're grandfathered in, and they're in this awesome situation or whatever. And you're older, and you have that longevity with that company, and you think it's awesome. Well, it might be. Like, I have a relative that's been with AT&T for over 20, 30 years. And whenever I called AT&T for that relative, they go, oh, well, you're in the tenured program. So there's legit tenured programs out there for people like that. But those generations are dying off. And those programs are going to die off because nobody else in the world does that. You know what I mean? So let me see. I have a question. I have excellent credit, but I'm not employed. Is that credit any good for me? So it is good. Okay, so having credit is one thing, and then having income is another. So in order to get a loan, you have to have credit and income. So if you don't have income, there's no reason for you to ever get credit, like actual credit for anything. Now, my question is, what is your goal in life? Why do you need good credit is my question. So tell me, why do you think you need credit? Because Dave Ramsey has debunked everything. You don't need good credit to buy a house, because there's something called what is it called? Somebody help me out in the comments. It's called where the underwriting. Oh, manual underwriting. Yes. So where they'll do manual underwriting, they look at your incomes, they look at your history on paying whatever you do pay, your cell phone bills or whatever. They make sure you don't over withdraw. They do like a lot of extra work. When you do the automatic underwriting, where it's just like generic, it's just computing. A computer does it and says yes or no. So debt to income ratio is a really big deal, guys. So if you don't have a steady income, and like entrepreneurs and people that own their own businesses, that is another can of worms. It's hard for people to get money, loans and stuff like that way, because it's so volatile. You can make a lot of money, you can lose a lot of money. It's just craziness. And I'm learning that as I go through my business journey here. So all of these things that's my question to LOL, because I have a vehicle, I have a home, I have a side hustle. I really don't feel like I need credit. Correct. So you have to figure out what your long-term goal is. So if you have a long-term goal as becoming a real estate investor, and you want to flip these houses, or you want to do short-term rentals, or you want to get several different units, and you want, rental income, and you want to invest in this real estate, because you may pay $200,000 for it today, which is, halfway decent, expensive property, depending where you live. But just in 5 years, it could be worth $400,000. Or in 10 years, it could be worth $500,000. Or, it's always going to increase. It's hardly ever going to decrease. The only time property values ever decreased was during the 2008 home crash, and that was because of the lending aspects of the way that people were financing their homes. Like I told you in my last video, we bought our home with zero money down. We put we had a down payment mortgage. Our down payment was financed, and then our home was financed. We put zero money down. Excuse me. So the people that put zero money down, after Oh, and then they had balloon payments and stuff like that. So once those balloon payments and those interest rates and things like that, the whole housing market crashed. We all know that. So those houses, there's a flood of real estate in the, in the market then, and they had to decrease prices just to get them sold. So anyways, but yeah, normally in a normal smart economical state, housing prices do not decrease unless there's something just regional, like a large plant closed and everybody had to move out of that small town. So those decreased, or every so often different areas would depreciate in value a little bit just because of like the people moving in and stuff, but it was not significant. And if you were to just keep that property for another 10 years, eventually it'll be, it'll come back up. But land, God's not making any more land, guys. Land value will always be will always increase and stuff like that. So like I said, this is not financial information. Don't hold me to everything that I'm saying, but this is just my experience and knowledge and things like that, because I own property. I've actually bought and sold 3 different houses. I think 3. Yes, rethink your future goals. So yes, everything that you're doing, you need to think about your future. And I live in this society with these people where they're like, well, we might not be here tomorrow. So, but yet those are also the people that don't have much retirement. They haven't been putting stuff in their 401ks and their IRAs, and they haven't been doing the Roth, when they were younger, or whenever it became available and stuff like that. So these are all things that people need to think about. And if you are younger, so let's just say you're under 30 or you're under 40, and you want to retire before you hit 62 or whatever your retirement age is, and you think there's going to be Social Security out there or whatever, but you want to retire before you can get Social Security, you need to be thinking about doing a Roth IRA or a Roth 401k from your employer. So Roth is where you put in money after you pay taxes. So if you put the money in after you pay taxes, then so yes, you pay more in taxes in 2024, but whenever you go to retire prior to being old enough to retire, you can take that money out tax-free. So let's just say you're a nurse and you want to stop working when you turn 50. So right now I'm 37 and I make, how much do nurses make? 70, 80, 90,000, I think nowadays. I don't know. Let's just say I make $80,000. And but I want to retire when I turn 50. That's 4 or 5 years before I can do Social Security. That's before I can touch some of my other retirement plans and things like that. But if you put all this money in a Roth IRA, you can actually take anything you put in anytime, because it's all after taxes and the fees are different. There's no fees and things like that. Now, if you take out, there are fees associated, I think, on the interest you gain, but all of that builds up tax-free. Remember, talk to a CPA or a financial advisor to like actually understand what's going on. This is what I understand from me talking to these people. But like the Roth, you can take out tax-free and it's not earned income. So you don't pay taxes on that because you've already paid it. And then all the interest, all the interest that you earn throughout the 10, 20 years it's in there is tax-free as well. So it's really awesome. It's something that you need to think about doing if you're still young, or if you want to retire early and you're in a high income tax bracket, or if you're in a low income tax bracket, like different. So if you're going to be in a high income tax bracket when you retire, or reduce your amount of spending. So let's just say I'm 30. No, let's just say I'm 20 and I only make $60,000, or I only make $30,000. You're 20, you make $30,000 a year. You're a professional, whatever. So your tax bracket is low. It's like 10%. If you have kids, you probably don't even pay much of anything in taxes. If you were to put that money in a Roth IRA and you paid that 10% in taxes at that point, say you put $10,000 a year, there's limitations. I don't remember what it is, 7,500. It increased this year. I don't know. But just say you put 5,000 in there. Over 20 years, that 5,000, you put 5,000 every single year or whatever, or you just put in there that 1 year, whatever. Let's just say you have $20,000 in there whenever you go to reduce the amount that you're going to work. So you're going to retire, but you're still going to work some or whatever. Well, that year you're going to be at the top of your income level that you've ever been. When you're older, you're ready to retire, you're going to be making the most you've ever made in your entire life. More than likely, you're going to be making $80,000 or whatever. But that $5,000 you put in whenever you were only making $30,000, you already paid taxes on that at that low income rate. But now that you're making $80,000 and you're gonna go down, you're still taxed at that 25% rate, if that makes sense. So if you pull out the Roth, that's not earned income, so you don't have to pay taxes on it at 25%. But if you were to take it out of your other IRA, you have to pay ordinary income tax on regular IRA and 401k distributions, if that makes sense. So then you have to pay that 25%, interest rate until you actually are fully retired and you have your steady income and you're not working on the side. So let's just say you make 20%, that's just something that to think about. Like, if you know that you're going to be working, if you know you're never going to fully retire, you're always going to do some type of work, just think about, doing some type of Roth when you're in a lower income bracket, if that makes sense. So when you have kids, when you are in a lower income bracket, if you have a business that is offsetting your income, like your earned income through a Scheduled C or whatever, all of those things could play in there. And your CPA can actually tell you, yes, you need to put some money into your IRA to decrease your income level. Or they'll say, oh, you could be putting some money in your Roth because of this or whatever. Like, having a CPA is a really awesome thing. Do you go to a bank to start an IRA, or is it through your job? So a IRA, anybody can have an IRA. My children, one of my kids, I think this year I'm going to do all of my kids because they're all old enough. Anytime you have any type of earned income, you can open up an IRA. So like if you babysit, if you mow grass, if you, do some organizing business or whatever, if you have earned income, you can put that money into an IRA. And you want to know what kind of bank you go to. So different banks have it. I personally use Fidelity because my first job that gave me 401k and all that benefits was Elvis Presley Enterprises in Memphis, Graceland. Everybody knows it as Graceland, Elvis's house. And theme park, whatever. Okay. So even part-time employees, they gave them 401ks and they matched it. And they did the Aflac insurance, and they did they gave you tons of benefits, even as a part-time employee. Thank you so much, Graceland Enterprises. And so they actually educated me on IRAs, because we had to sit in a meeting, we had to watch these presentations. They taught me about 401ks when I was 19 years old, or maybe I was 18 or 17. Maybe I was 18. I don't know. Whenever I was a young lad. And so I got all this awesome money. Now, I put in, keep in mind, I only worked there like 6 months, but I put in a certain percentage and they matched it. And I did a Roth 401k. Roth 401k. And I split it between Roth 401k and regular 401k. Now, the match, keep in mind, when your employer matches, that is always going to be regular. So you're always going to have a regular. And then what you put in, you can choose to do Roth. And since I was at a low income tax bracket as a child, 19 years old, I just did Roth because it made sense. So anyways, so they were going through Fidelity. And then whenever I quit there and went to my real job, and they had a 401k, that was through John Hancock, I think. Yeah, John Hancock. So I kept my money in Fidelity. And whenever you leave a employer, you have to roll it over into an IRA. So you have to, you cannot open up a 401k unless you're with an employer, because the 401k is them putting money in with you. And then the IRA, anybody can open up one as long as you have earned income. I think that is, you ask the bank whenever you call them to open it up, but you don't even have to call. You just go online and do it. But I think they'll ask you if you have earned income. And then you put money into that. And I think the reason why you have to have earned income is because, let's just say you were using your husband's money to put into your account, and just because you only have one name on that account. So it'll be just your account, and then you'll have beneficiaries of that account. So if you use your husband's money, put it in there, then you're transferring money from his name to your name. And that might be considered some type of fraud. I don't know. So I think you have, keep in mind, don't take this to heart. This is not financial information. This is just my, what I've experienced and information I've come across. So, yes, Fidelity.com is where I go. There's also John Hancock. There's hundreds of different places you can open up an IRA, but Fidelity's the easiest. They have awesome customer service. They even have branches locally. There's one in Memphis, like in the Germantown area. And then I don't know where other ones are, but they're worthless though. Like, I walked in there and they're like, oh, well, just log in on this computer. And then I'm like, well, I came here for you to do it. Why do I have to do it? But anyways, something about security. I guess they don't trust their employees. I don't know. But yeah, you just do everything online. Now, I will tell you this. When you open up an IRA, you have to put in at least, I think it's $1,000, honey. If you put $1,000 in it, you have to put it into the account. That IRA account is no different than a savings account. After it's in that account, you have to go through all these processes of verifying your bank account, getting these deposits in and approving them, and then like typing in the dollar amount and all this other stuff. But once you get the money in there, you have to go back in there days later and put them into funds. Okay, you have to actually invest that $1,000 after you transfer the money. So there's there's several different steps and processes you have to do. Just make sure you go back. It's like 3 to 5 days later. Once the money's in there, you have to transfer it. Now, what you need to do, and this is what I'm recommending. Remember, this is not financial advice, but there are freedom funds. They're called Fidelity Freedom Funds that will change based on your age that you're going to retire. So if you're going to retire at 62, then whatever year you turn 62, it is a Fidelity, and then it's 2052 or whatever the year is that you're going to retire. So it can get extremely confusing. You can get a little overwhelmed if you don't know what you're doing, but I just Google everything. Like if you can't tell, I Google anything I want to know about, and hopefully I get someone that is actually telling me the truth. But but yeah, so I learned that because I had to set that up for my son. So we have a business, and my son mows our grass. So if he earns money mowing our grass, even as a child, he can put like the money that we give him, he can put into an IRA. Like I have to do it. It'll be a custodial IRA. I have to transfer it and everything, but he legit gets paid for those services. And so you can actually even do it without a business. I believe you would have to talk to your CPA and different people like that and figure out exactly how to legally do it. But yeah, it can totally be done for children to have IRAs. Just imagine if you put $1,000 in your child's IRA every single year until they got their own job and then they started doing it. They are going to be millionaires by the time they retire. I mean, it's guaranteed. Now, not everybody can financially do that and look at me and say, you can't financially do that because you're $400,000 in debt. I'm just okay, living within your means. I think I'm living within my means because I can pay all of my bills. That is something else. Oh my gosh. I can pay all my bills. I can invest, and I have a zero balance, or I have, whatever at the end of the month. I'm living within my means, but I'm $400,000 in debt. Does that make sense? I'm not living within my means. My reality has shifted. I don't know what to do. It's really hard for me to do the Dave Ramsey thing. For one, and this is another thing, we watch these documentaries and these vlogs and all these, wealthy people tell you, just focus on one thing. You can't have 12 businesses and expect them all to go, to be great. They say focus on one business. You can't work your 9-to-5 job and run this business and another business and expect them to all take off. So I have 2 businesses and my 9-to-5 job, and that's made me think, am I doing something wrong? You know what I mean? Thank you, Stacy. I love you too. So, and this is the problem, is I'm thinking about my health. I'm thinking about my finances. I'm thinking about my careers. I'm thinking about everything. Only $1,000 a year. That's like saving $100 a month. That seems doable if I'm good steward of my finances. Oh my gosh, I love you so much. You've been watching Dave Ramsey, haven't you? So yes, it's totally doable. there's a lot of people that employ their children for different things, like marketing campaigns or, mowing the grass or whatever. And they pay their children, and then they invest that money into an IRA for their children, a Roth IRA, custodial IRA. And then when those children go to retire and they can touch that money legally without taxes or without fees, they will be millionaires. And when our kids become retirement age, they need to be millionaires, because you're not going to be, everything's going to, with inflation, this is another thing. Oh my gosh, guys, inflation increased 7 to 12% or something like that over the past 4 years. My paycheck only increased 3% each year. 3%, but inflation increased so much more. Oh, and then there's those people out there that tell you should not be saving money because you're actually losing money when you save money because of inflation. Oh my gosh. There's just so many things going on in my head, guys. Like I said, between all of those things that I just told you, I don't know. Like, I really want to invest in our property and do another Airbnb, but yet our debt to income ratio, because our businesses don't count as income. Like my YouTube business, the money I make on that doesn't count as my income, and my other Airbnb, that doesn't count as income, because when you own your own businesses, it's more of a liability than it is an asset. So we only have to go by our income from our W-2 jobs. And that's another thing, is my husband works an hour and 10, 15 minutes from where we moved to. So there's a lot going on, guys. And yes, I work from home, and that's something else. Dave Ramsey says, well, all what you need to do is increase your income, and you'll be able to pay off these debts a lot faster. Well, I work from home now, and I've been working from home for 5 years, and I need to clock back in and start back working. But I'm at this situation to where all these corporations are laying people off because they're scared of a downward recession and things like that, and trying to balance their budget and make the shareholders look good and things like that. They're laying off the people that work from home. So if they're going to lay off people that work from home, what situation am I to ask for a pay increase? So if you work a awesome job and you have not gotten a significant pay increase over 3% in the past 10 years, say if you get a consistent 3% every single year, but in the past 5 to 10 years, you haven't received anything over 3%, you need to ask for a pay increase. But I'm there. I'm in that bracket. I know I need to ask for a pay increase, because all these people with the pandemic and them getting laid off and then going to a new job and then jumping jobs, and then, everybody's increased their salaries significantly. You can just Google it. So if you've been at your job for over 10 years, Google what the salary is for 2024 for what you do. So if you're customer service in the flooring industry, Google that. If you're, sales is different because you get paid on commission more than likely. So that's different. But if you are in a regular salaried or hourly paid job, just say you work at McDonald's even the lowest income, like if you worked at McDonald's, they paid you minimum wage. Well, right now McDonald's is paying $15 an hour, like legit. Yeah, McDonald's raising their pay rate. Yes. I don't know how much they legit make, but I think I saw $15, $16, $19 an hour, like crazy amounts of money. And I was just like, well, I could go work at McDonald's and make almost $20 an hour. Yeah. I'm not going to, but I mean, legit, working at McDonald's making almost $20 an hour is probably more than likely more than I'm actually making on YouTube, editing videos, shooting videos, the money I put in gas and all that stuff. That's another thing. YouTube, on my taxes, after I got my CPA to like run all the numbers, I lost $8,000 doing YouTube and penny shopping. That's another thing. $8,000 because you get to deduct the mileage that you spend creating that video, penny shopping, and doing all that stuff. You get to deduct like a bunch of expenses as your business, and I actually lost $8,000. So that was on a Schedule C. It deducted from my earned income, and I did get more money at the end of the year in our tax return. But a side hustle is supposed to make you money, not lose money. You know what I mean? So this year's going to be different. I can already see that I'm getting more engagement, more views and stuff like that. But I don't know, guys. Now, these are just rambling sessions. I just ramble on all day long, chatting about any and everything. And I was going to edit my video. I've got to edit my video, and I'll post it. I will post I'll post a video tonight after I get done working. I have to clock back into my regular job, and then for a few hours, and then whenever I'm done there, I have to edit my videos. I have to cook dinner for my family. Keep holding on. I love your DG videos. Thank you so much, honey. Yeah, if y'all could comment more and just give me more feedback and things that you want to see on my videos, that would be awesome. I do have a few comments telling me that they don't like my new style, that they want the old country couponer that doesn't say, obscene, stuff. And I'm just like, I said it, I just edited it out. You just didn't see it. I mean, it's just my personality and my sense of humor. I'm a little crazy, just a little bit. And that's just how I roll. You know what I mean? It's little, if I don't have fun and I don't laugh and I don't have that crazy sense of humor, I would just be depressed all the time. I actually came from a family that was in the negative mindset, that they were always negative. They always saw the cup half empty. You know what I mean? And I swore to myself I would never do that. I would never live my life that way. And so far I haven't. Be you enthusiastic. The right crowd will drawn to your personality. Awesome. Thank you. But yeah, so I'm always the cup is half full. I believe in mind over matter, but God has proven me wrong in several different ways. It seems like I still believe mind over matter to an extent, though. Like there are hormonal things that can affect you to where mind over matter doesn't actually work. But yeah, I don't know. I'm constantly thinking about everything. If you cannot tell by this video, comment down below and let me know what you want the next live video chat to be about. It could be about our health. It could be about our school systems. Oh my gosh, don't get me started. It could be about what? More financial junk. I don't know. I want somebody to come on with me and ask me questions, because me coming up with stuff is kind of like a squirrel in a gas tank, like a squirrel in a gas tank. Just craziness, like, because my brain is full of just random stuff. Balancing marriage, children, business, and work. Oh, I'll tell you this. I have one philosophy, and it's time. I don't know if this is the right word. Time segregation. Like, I live 1 minute at a time, and I think about everything beforehand. So, from 6:30 to 1 o'clock is my regular job, my W-2 job. And then from lunch, from 1 to 2 is my YouTube. And then from 2 to 4 is my W-2 job. And then from 4 to 5 is my YouTube job. And then from 5 to 6 is my family, if that makes sense, my family time. And all the responsibilities I need to do in there. So that's cooking dinner, helping out with homework, or whatever. And then from 6 to midnight is hanging out, having fun, making sure the kids get baths, stuff like that. So, like, I just separate by time. And then that is the only balance I have. Now, there are days, like on Tuesdays, that I skip the whole family aspect of things. And I say, you fend for yourself. I'm going penny shopping. Yeah. So that is my balance, marriage, children, business, work schedule. Like, I just have a schedule of what I do when I do it. And if it doesn't happen, I just call in that day on whatever it is. Like, yeah, I just take one segment at a time. That's all I do. I wake up, I edit videos. I edit videos on my lunch. I edit videos after work. You have a structure. I'm horrible with timing. I usually all over the place and trying to do everything. My free day is Wednesday. That's awesome. So I don't have any free days. Well, no, cut that out. I have Saturday as my free day. I have one free day Saturday. Sunday is remodels and or church. It's supposed to be church. Lately it's been remodels. I haven't actually been to church since we moved. Well, I did a couple of times. But we have to travel pretty far to go to our home church. So we don't go there that often. We haven't actually found a church here yet. My kids have a church that they go to and do, kid activities every Tuesday. So that's pretty awesome. But we haven't actually found our new home church yet. One day we will. But yeah, so my free day is Saturday. I spend all Saturday with my family. We do whatever we need to do together, including grocery shop. Actually, I grocery shopped the other day. What day was that? I don't know. Sometimes I take off on Sundays too. Sometimes I don't do remodels on purpose. So, but yeah. Anyways, I've got to go back to my real job. So I will see y'all later. Thank you so much for being here with me. Thank you so much for hearing me rant and, chat up a storm. If you cannot comment, it's because you are not a subscriber. Please subscribe. Thank you guys. Bye.